been dramatic. The S&P is already up almost 9% for November. And when we look farther down into the riskier assets like small and mid caps, we're looking at almost 17% for month to date. So it is a big bump, but I think this could certainly settle down. Some of these stocks have been so beaten up, and what we've really seen in this big jump in November is a change in leadership, a reversal. We've seen instead of the mega caps, our traditional stocks being the leader, we've had consumer discretionary energy in the large caps, and then we've also seen small and mid caps outperform. So in that sense, I think that it's coming from stocks that have been massively beaten up earlier in the year. I actually think it's pretty healthy that we're seeing this reversal or this change in leadership in November.
Is there any part of the market that you think is still fairly or even undervalued, Erin?
Yeah, there's still plenty of places because just for years, in fact, for most of 2019 and even 2020, it's really been just about the mega caps. And so I think it's actually healthy that we're finally seeing a little more breadth. And one of my favorite areas is going into the small and the mid caps and just using a broad index ETF rather than doing individual stocks. I want to disperse some of that risk. And when you look at the type of growth rates that we're seeing for 2021, because this is really how investors are investing right now, is they've just given up on 2020. We're not really that concerned about fourth quarter 2020. It's all about 2021 and the economic recovery. And when you look at the type of profit growth rates that we see in the small caps, we're looking at 60% profit growth versus about 23 for large caps. So, 2.5 times the growth rate. Yet they're trading well below valuations, and they're still just trying to catch up on their underperformance for the past 2 years. So I think that's an area that investors can still get into. There's still a lot of room for growth and a price appreciation. And as we do keep getting these positive news about vaccines, this is only going to further help those types of assets.
Any of these so-called stay-at-home stocks still worth owning, Erin, or do you think their time is coming past?
I think you've really got to be choosy and look at the fundamentals, look at whether they were solid companies to begin with and how much of that is going to change post-pandemic versus just what we need right now during the pandemic. And so actually today, whenever you get good vaccine news, these are great days to actually buy those stay-at-home stocks because usually they get pretty beaten up when there's positive vaccine news. So two of my favorites are Peloton and Netflix. Both had very strong earnings, and people, particularly with Peloton, once there's a sunk cost and they already have that $2,000 machine, they're sort of loath to change and go back to the gym. And so I think this is all about moving to the suburbs. We see these record home sales.
Yeah.
And so having a home gym when you have more space is actually very feasible. The same with Netflix. So I think those are two companies. I think some of the more vulnerable ones like Roku and Zoom, their rise might have been a little too quick. And they're a little less stable when it comes to earnings, a little early in the growth. So